Good morning, everyone. Welcome to Windsor Brokers Live Daily Market Outlook. Today is Tuesday, 9th of October 2012. What to say at the beginning of the day? The situation worldwide is again moving towards its worse side, as IMF warns that global economic slowdown deepens. Then again, increased problems, actually raising the problems with in the Middle East as the situation, especially between Turkey and Syria, escalates with the further fighting and the sorry, there was a sort of technical problem. I just lost the connection. As said, the situation in the Middle East, especially between Turkey and Syria, escalates with further fighting and the possible threats of a situation escalating more and bursting into the serious problem and war, all putting pressure in the markets. As mentioned at the beginning, the IMF warns said that global economic slowdown is now worsening as it cut its growth forecast for the second time since April, and warned the United States and the European policy makers that failure to fix their economic ills would prolong the slump. Global growth in advanced economies is too weak to bring down unemployment, and what little momentum exists in coming primarily from central banks. The International Monetary Fund said in its World Economic Outlook released ahead of its twice yearly meeting, which will be held in Tokyo later this week. The key issue is whether the global economy is still hitting another bout of turbulence in what was always expected to be a slow and bumpy recovery, or whether the current slowdown has a more lasting component. Now, this is the question that will give us most likely very soon an answer, but said quite big pressure seen in the markets due to the current problems with the euro still under pressure despite some positive tone developing from yesterday's lows, as Spanish bailout uncertainty persists, and the euro was basically on the back foot. Yesterday it found some support, but still unable to clear 130 as a psychological barrier, as ahead of Eurozone ministers meeting today, and whether Spain now needs a bailout or not, keeping investors a bit confused with these points, and not exactly having an idea what is the likely scenario. As said, today's important meetings is Angela Merkel, German Chancellor, with the Samaras, the Prime Minister of Greece, today in Athens. We have the Mario Draghi's speech ahead of ECOFIN Eurozone ministers meeting later today. So a lot of events that, of course, will be discussing the current situation, the possible steps to be taken in order to improve the current situation where the Eurozone is standing. As said, apart from these already mentioned events, we have from UK the manufacturing production for August that is expected to dip to minus 0.6% compared to quite a good result in July of 3.2%, and then trade balance from UK's trade gap is expected to widen to 8.3 billion sterling compared to gap of 7.1 billion in July, and industrial production again is forecasted to dip to minus 0.5% compared to again quite positive July's release of 2.9%, and from Canada, housing starts for September due at 12:15 GMT. Just recall the UK data are due at 8:30 GMT, and the 12:15 GMT is Canadian housing starts for September. Another disappointing forecast, 201,000 new starts seen forecasted for September compared to 224 units in 224,000 units in a month of July. As said, the ECB president is due to have a speech. This is at 7:30 GMT, so it's going to start quite soon. And of course, we have the meetings of Angela Merkel and the Greek Prime Minister, as well as ECOFIN meeting today. They are quite important things, so we'll keep an eye in the markets and see, as euro remains pressured, as we mentioned at the beginning, and sees no much prospects for improvement and further recovery, despite finding support at 129.36 yesterday. The negative tone still dominates in the 1-hour chart, as basically the pair fails to regain the broken bull trend line of 128.00, and as well as 130.00 as psychological resistance, as indicators are below their midlines, and the price currently moving below 10 and 20 days moving averages, keeping more focused towards the downside, as we mentioned in our written technical analysis distributed this morning, that more risk is seen towards the downside as long as 130 and 1 at 30.30, the previous last week's high of last Thursday stay intact. Of course, the initial trigger was seen on break at 130, with the hesitation seen under this level during the late hours of Asian and early hours of European session, resulting at the beginning of European session in fresh weakness that is now pointing lower. And initial immediate support is the yesterday's lows, intraday lows at around 129.65, ahead of a more significant 129.36 yesterday's low, loss of which would be trigger for a further weakness, as overall picture is still quite negative following the reversal from 131.70 mid-September double top, as the fresh gains failed at 130.70, and a quick reversal lower still keeps them more focused towards the downside. Loss of 129.36 is to open the next quite important 129.00 level. That also marks approximately, I would say, 61.8% of the latest uplift from 128.02 to 130.70, and basically seen as a break point on the downside in case of loss of 129.00. Most likely the price will look for revisit of 128 base. That is marked as a key near-term support. This is low of 1st of October 2012. On the larger picture, there is still positive structure, but confirmation of the lower top at 130.70 that will be seen on break below 128 base, where is also the 200 days moving average. Would definitely signal some stronger corrective action of the larger uptrend from 120.42 that peaked at 131.70 in mid-September, with the current risk seen on a failure to regain 130.70 that will basically give an early signal of lower top, with the break below 128 seen as a confirmation, as all indicators are pointing lower, and the pair is basically losing momentum on the daily chart. More focus currently seen towards the downside, with the loss of initial 129.36 barrier to open next, as said, important at 129.00. Conversely, regain of 130.00 and 130.30 is set to open 130.70, and the erase immediate downside risk, with the more focus expected towards the upside. Although with the current situation and the technicals quite negative, I would say that this scenario would be quite unlikely, in the near term. And the sterling remains basically under heavy pressure following a fresh extension of the 2 days down move from 162.16 last Friday's peak that dipped to 160.20 just ahead of 160.00 as psychological support, retracing approximately. Oh, I do apologize. I made a mistake. Here we have it on this chart. Retracing approximately 50%, slightly below 50% of the up move from 157.53 to 163.08, keeping the downtrend firmly in play as a series of lower tops and the lower bottoms defined. Definitely the trend down as last Friday's upside rejection at 162.16, failure to sustain gains above important 162 barrier, and failing to regain the trend line resistance at 162.36 triggered fresh weakness, with the negative sentiment seeing the downside now firmly in focus as the current consolidative action seen following a dip to 162.16, 160.20 was basically quite a narrow range and just consolidating before the fresh extension lower as outlook for sterling on the lower time frames. Studies are negative. All the indicators are in the negative territory, although some overextended conditions that triggered the current bounce higher did not show any more significant result. 160.46, so we're talking about 20-30 pips of corrective action, with the fresh weakness at the beginning of European session now pointing towards initial support at 160.20, and most probably 160.00 is as psychological support, loss of which to open another very significant level, 159.10. This is the previous peak of 23rd of August 2012, as well as 50% retracement of the larger 152.67 to 163.08 uptrend, reinforced by 200 days moving. Oh, pardon, I do apologize. Ignore the 200 days moving average. I was just looking the other level. 159.10 as said, 159.00, reinforced by 55 days moving average as shown on the daily chart, as daily studies are in the firm descent, and the loss of initial bullish momentum and now sees a serious threat for a stronger corrective action of 152.67 to 163.08 uptrend, with the break below 159.00 as a trigger seen for a stronger corrective action and a possible extension down towards 158 zone, which marks approximately 50% retracement, and the 200 days moving average. Conversely, on the upside, the initial resistance stands at 160.46. This is the session's high, while only break above 161, and I would say 161.50 would be a bit more supportive and would provide the temporary relief. We have the 55 days moving average approximately at this zone, 161.30. Only break here that is quite unlikely at this stage would provide some relief. However, the upside remains well capped at 162, 162.16, and in addition we have the trend line resistance at 162.25, and only break above these levels would turn the focus towards the upper barriers, 162.70 and the 163 zone. That looks quite unlikely at this point. More focus, of course, is seen towards the downside, as the pair is currently attempting below the session's low at 160.20. Already broke lower 160.15 seen so far, and more focus has set 159.65 is the 61.8% retracement, and then the very significant 159.10, 159.00 seen as the next downside targets. The dollar yen is under pressure still, as upside the rejection at 78.86 seen last Friday and dipped to 78.07, just close to 78.00 breakpoint, despite some corrective action to 78.40, where the 55 days moving average capped. The recovery still sees more focus towards the downside, as indicators on the 1 hour chart are still holding in the negative territory, despite MACD pointing higher, but is still below the midline, and the loss of momentum with RSI started to turning lower, as well as stochastic already giving a downside signal. I would say the downside remains vulnerable at this point, with immediate support 78.20 and then 78 zone seen as a break point of the latest corrective action. This is also marking 61.8% retracement of the upleg from 77.42 to 78.86, and basically break below 78 is to reattract the lower boundaries of the near-term range between 77 and 79.20 to attract 77.42 and then 77.12 as a low of 13th of September 2012, with the daily studies being in the negative territory, as well as 4-hour chart indicators now breaking below the midlines, keeping the downside more favored. In immediate support that's to be taken is 55. Basically, the near-term price action move between 55 and 20 days exponential moving averages, with the 20 days one already starting to point lower on the 4-hour chart and break below 55 days. One is to open our immediate support at 78.07, yesterday's low, and the 78.00 zone, also Fibonacci 61.8%, seen as a break point for a further extension lower, as obviously the pair failed to regain the important barriers at 79.21 was the rejection of 19th of September, and 200 days of moving average at 79.32 currently, a break of which is required to reattract and refocus another important and psychological barrier at 80.00. So far, as said, this is quite unlikely, as more focusing towards the downside, with the break below 78.00 also to confirm the lower top at 78.45 and extend the descent from 79.21 via 78.86 and a fresh attempt of lower top at 78.41 seen as a trigger. Basically, we have a sort of a triangular consolidation here. It's on the larger picture, it's more range trading, but in the lower time frames we still have some narrowing in the range, basically with the break of either side to define the fresh direction. On the downside, we have the trendline support at approximately 77.60 and on the upside at 78.80. Of course, with the indicators and technical outlook seeing a more negative picture in the near term, of course, more focus seen currently towards the downside, unless we see break above let's say trendline resistance 78.80 and 78.86, the previous high, to refocus 79.21. The dollar Swiss is attempting again at 93.55. This is quite a strong barrier, as for the second day the consolidation and corrective action of previous low at 92.73 posted last Friday was capped at this point. Now we have a fresh attempt, brief break, cracking this resistance. This is also the 55 days moving average, and approximately 50% of 194.36 to 92.73 down leg. Now we have the clear break as we are talking. The price is heading higher. Of course, next important barrier to be cleared is 94.00, where it's 200 days moving average, and then 94.36 1st of October high required to confirm the base at 92.37. We can say also the sort of double bottom with slight difference between the prices, and the open way for stronger recovery. Initially 93.97 is also includes the trend line resistance, main bear trend line of 99.70 peak of 24th of July 2012. Basically, break above these levels is required to resume the recovery. So the current break above 93.55 is seen as supportive, but still quite strong barriers between 94 and 94.40 seen ahead to be cleared in order to confirm. Otherwise, we might see another rejection and further ranging with more focus seen towards the downside. Hourly structure is now quite positive. I mean, the indicators were already positive, moving in a rather sideways mode in past 24 hours, with a slight improvement seen now as all started to point higher, with the 4-hour ones now attempting towards the midlines. Break above 94 definitely is to confirm the positive stance of the 4-hour chart indicators, and the open way for stronger recovery. As set, 94, 94.36 are our upside levels to be watched, while on the downside initial support is 93.20 and 93.00. Loss of these levels could be quite risky, as this would reattract 92.70 low of last Friday, and the 92.37 key near-term support low of 14th of September 2012. And as said, if you give me just a second, you still don't see it. Okay, the commodities improved slightly on the current fears of possible spreading the war and intensifying the conflict between now Turkey involved with Syria, but from the other side, deepening a crisis in Eurozone and the further signals of a possible stronger impact of the crisis see the investors still quite unsecure with the commodity prices, as the oil price recovered to as high as 90.31 against yesterday's high at 89.87, with the peak seen at 90.31 ahead of fresh extension lower seen at the early hours of European session, keeping of course the overall picture that is quite bearish still in play, as we have the descent from 100.72 peak of 14th of September that so far reached low at 87.69. This is low of 3rd of October 2012, with the subsequent recovery still showing insufficient strength in order to regain some important levels and confirm the near-term base at 87.69. We're talking about levels at 93.13, 93.80, and 94.00 required to confirm. These are approximately 38.2 and 50% retracement of the entire down move. However, the failure to regain the initial barriers on last Thursday, 91.81 was seen, and since then the oil is again in the descending mode. Slightly higher low seen at 88.19 yesterday, still and not promising much at this point, as negative tone continues to dominate on the lower time frame. Some improvement seen on the hourly studies is now fading, as indicators started to point lower again, and prices already below 10 and 55 days moving average, attempting below 20 days one. That will turn focus again towards the downside. As said, more pressure seen due to the current increase and the deepening of the Eurozone and the worldwide crisis. That is the main fear for investors, and basically the deepening of the crisis means directly a lower demand for the oil, and this is what keeps the pressure on the oil price since it peaked at 100.72 in mid-September. Since then is in the negative movements following the stronger recovery of 77.27 end of June low that peaked at 172. This was so far the highest seen, despite also the comments from OPEC saying that ideal price for them would be around $100 to $120 per barrel. The market shows something different, and basically the more realistic picture is currently here, as strong fears of possible deepening crisis worldwide keep the oil price pressure. And I would say at this point quite likely is to see again 87.69 and 87 as the next strong resistance, unless we see regain of 93.80, 94.00 levels that are seen as breakpoints for turning a near-term focus higher. More likely scenario would be again further weakness and the test of the lower targets 87.69 and 87.00 in the near term. And finally, gold remains under pressure in the near term following peak fresh yearly high at 1795 seen last Friday, with the dip as low as 1766 that cracked our initial 1770 1763 barrier we're talking about. It's better seen here. No, pardon. 1770 1763 barrier, approximately below 61.8%, and the higher base of beginning of October, and the lows of 1st of October 2012, so 1st and 3rd of October. These are the levels being tested so far ahead of a brief recovery that was capped at 1779. Recall to our yesterday's analysis, written analysis for the gold. I mentioned that minimum 1785 is required to be again. This is approximately half of the move from 1795 to 1766 in order to turn the focus higher. Unlikely this hasn't happened. 1779 seen so far, and the fresh weakness is now pushing gold. Basically, the range of yellow metal in past couple of weeks is still in play, with the downside strong, the downside narrower range floor at 1750 and the spike low at 1736, seeing limiting the downside, and the upside approximately 1790 with the brief trips above this 1795 seen on last Friday. Still the directionless movement since 14th of September 2012. I would say we are still within the range. Of course, quite weak near-term structure, as the hourly and 4-hour studies are losing traction again. Sees currently more focused towards the downside, as loss of 1766 and 1763 will open next target, important target at 1750 zone, and basically break of this level would be quite risky for possible test of 1743 is the Fibonacci expansion, so 161.8% of the up move 1763 to 1795, and of course the spike low of 26th of September at 1736 that might come in focus in case of break below 1766, 1763. Just to finalize it, the more focus on gold currently seen towards the downside, but the price is still within the range of approximately nearly 1 month range, and more focus seen towards the downside. Borders at 1763 and 1750, with the loss of the later seen as a trigger for 1736. Conversely, regain of, as I said, approximately 1785 is to turn focus higher, 1795. This is the high, and probably to open way towards the next round figure and psychological barrier at 1802. These are the highs of November 2012. That was all from me for today, Tuesday, 9th of October. Please, do you have any questions? If you have any questions, you can submit them now. Seems no questions. Okay, will be tomorrow. I would like to thank you all for attending our live session. We are back again tomorrow at the same time, 7 o'clock GMT, 9 o'clock Central European time, 10 o'clock local Cyprus time. So put your reminders for the next session. Of course, in case you miss any part or you miss whole session, you can find it. You can find the recorded version in the YouTube. Our page is called the Windsor Brokers Forex. And until tomorrow, I wish you a nice day and, of course, very profitable and successful trading. Good luck.